Let's bring on board our next guest on the program, and great to have oil and gas energy expert Jay Young, who is on the phone with us. And Jay, I want to welcome you.
Hey, Mark. How you doing?
I'm doing well. Thanks for jumping in. I appreciate you joining us. And let's where do we start, man? There's a lot of stuff to talk about. But great to have you on as always, and give folks a little bit of background about you.
Yeah, well, thanks, Mark. I appreciate that. Well, we're an oil and gas company. We look at prospects. We look at $100 million asset. We put money into them, and then we lease the property up, and then we'll go drill, spend $100, $200 million, and look to sell it for $500 to $600 million to a public company. That's kind of our. If you're buying real estate, if you're participating in an apartment complex, we do that, but kind of on a bigger scale. So we're in the old business. I'm a 12th generation. So that'll be a long time.
Wow.
I'm a fourth generation. Yeah, I'm a fourth generation oil and gas company. But my great grandfather did have 12 kids, and they were all in the oil business. It's like if you're a man, you're in the oil business, and if you're a woman, you're married to somebody in the oil business. So we kind of go back on the oil and gas. I know I've been there, done that, seen all these cycles. But it's like, can I tell you what's going to come next? Well, I can give you some type of an opinion, opine, but man, there's a lot to it, Mark. I know it's what you want to talk about.
No, absolutely. Yeah, there is a lot, and a lot of folks are, asking as we go into March, summer travel season's coming up here very soon.
Yeah.
Could oil prices hit $100 a barrel by the summer? $100. Wow. Can you imagine?
$100. I know. Well, I mean, we do have, Goldman Sachs, and we do have some other big banks out there that can see it. And instead of speculating on that, let me tell you the reason why we feel like there's a good shot at oil prices going up. Why? Because supply and demand, right? What happens with supply and demand, and what happens? Why does the price go up? I mean, is it all you oil guys out there in Texas? You get your cigars and your cognacs, and you sit in the back room and go, "Hey man, let's raise it another 26 a gallon tomorrow, and let's see if they'll buy it, type deal." And is it that, or no? It isn't. I'm here to tell you. I know that it's going to piss some people off because they like getting mad at us guys. And, but it's all about supply and demand. I mean, how much supply do we have on the market,
right?
And how much is the demand? Hey, if Biden wants to kill all the demand around the United States, and because he does not want to use oil and gas, but he's doing a good job, but he's doing it on the supply side, not the demand side, because he's not doing the permits and killing deals left and right and all that we can talk about, but talking about supply and demand, we're not drilling for oil and gas in the United States like we need to be drilling. That's what's going to raise oil and gas prices.
What would you like to see as far as the number of rigs that need to be operating? I think what do you follow, the Baker Hughes rig count, and based on all of the environmental stuff going on. I mean, what would be an optimal number that we could confidently say, okay, man, it's drill, baby, drill. We're back on. We're going to be using more. What would you be comfortable with the drilling numbers? I
mean, it's the truth. I like 65 and 75, and I like that. I mean, it's good prices for the internal rate of return for oil and gas prospects. But to tell you the truth, I mean, if you're going to invest with me, you want to see me buy deals at 40, 50 and sell at 100. I mean, like anything else, right? Buy low, sell high. That's something that took me a few years in my life to figure out, or not figure out, but do, I guess.
Yeah.
But you want to, but I'm very comfortable with getting rigs drilling for oil at $65, $75 a barrel. But I just fear, oh my gosh, that it's going to go to 35 and 45, and that's the reason why we're not drilling as much, because there is that fear that oil could go negative again.
Yeah.
And but go ahead.
I was going to say, based on the fear, though, that people are not going to be fearful this summer, that they're going to get out there and they're going to drive. So like you mentioned, with supply and demand, it's just going to be maybe a scenario that maybe we could hit $5 a gallon for diesel. We could hit $5 for, the family SUV when we want to go to Disney World, things like that. $5 reality? Can that come back in your estimation by summer?
You see $90, $100 oil. You'll see that gas price go up. But that's kind of it's unfortunately supply and demand. That's what happens. With oil prices and that oil that's produced in the oil field goes from the oil well itself to a tank or a pipeline, and it's piped to a refinery. And if we have the right kind of oil needed for different products, because that's one thing too. I mean, there's a lot of different uses for oil. Instead of just gasoline for cars, people are like, oh my gosh, we stopped driving gasoline-powered cars, we'll do away with oil. No.
Sure.
It's about 60% for cars, trucks, automobiles. And so, the least amount we use there, it's going to go down, but we're still using, 8-9 million barrels a day.
Right.
For different products other than the transportation.
I would imagine that you are not an electric vehicle owner. Am I correct?
That's exactly right. Exactly. Now, not that I don't like them. I had a buddy of mine, one of my employees, took me over to our new office space here in Dallas. In a car, and it's like I got in, and he has a Tesla. He's fired. But anyway, no, I'm just kidding. He's not fired. But I got in his car, and I said, man, is this thing on? And he goes, yeah. He said, it's kind of like the Jetsons, the old.
Oh, yeah, it is. No question about that. And that leads me to my point about the fact that, you're mentioning that, we could see $5 a gallon across the board. Do you think that's going to push the sales for the EV market, electric vehicle market, or a lot of folks still skeptical on that thing, that they've got maybe range anxiety with the electric vehicle market side? A lot of hesitancy there?
Yeah, there is. And well, it's kind of like it matters where you are, right? If you're in California, they sold 1.2 million Teslas last year. They expect, I don't know what they're going to sell, but they expect to sell 1.8 million this year. So they're increasing. They're increasing. Well, hopefully they are, but they are increasing their hope, I guess, of selling more cars. And it's not a bad. I mean, you still need oil and gas for the tires, for a lot of the products on the Tesla car. It's not going to do away with. It's not going to replace the need for oil and gas in the United States anytime soon.
Yeah, right. Of course.
Which is one of my my thoughts. And where's it going to stay? I mean, do we see oil prices staying at 65 because of that, or whatever? And then. Where's the upside, downside for investors?
Well, things going on at the fuel pumps, costs expected at the pumps going forward as we go into summer. Can you believe we're going to be talking about summer here real soon? Man, seemed like we just celebrated New Year's, and off we go. We're into March already. And, Jay, again, thank you very much for joining me on the program. Great to have you on board. I know you talk with a lot of the folks that are involved with the oil and gas drilling business, and are they optimistic right now? I mean, we've got an interest rate environment that is, it's not a good one. Fed keeps raising rates. Is that kind of like discouraging investing, things like that? Or many of your constituents saying, you know what, Jay, we're just going to play conservative at the moment and just kind of sit on the sidelines for a while? What kind of booties?
Yeah, before we had a rise in interest rates, after COVID, there's just been a literally freeze on us getting back into oil and gas drilling. That's why rig counts down, 30-40% probably 30%, 35% since pandemic prices or rig count. So, but it's been more about, there's just all the capital's dried up. I mean, institutions, they used to have all the teachers' retirement funds, these real safe investments that they could go and look at these companies like NGP or Energy Spectrum, these kind of portfolio companies. What they did, which was brainchild by Richard Rainwater years ago, but they'd go in, they'd find a project, do what we do, and they would use all this money in the institutional, billions and billions of dollars a year. That's all dried up. I mean, it's nobody's drilling, Right. So that's my biggest fear, Mark, is that we're going to have a need for oil in the United States, and we're not going to have it, and because we're not going to have it, and we're going to need it, that prices are going to be pushed higher this summer and also this year.
Is it a situation, in your estimation, Jay, that knowing, say, the environmental laws, regulation, rules that have got to be followed, are many of those that could maybe invest in some kind of a refinery structure, infrastructure, are not going to be willing to do it because of the rules, the regulations, things have got to be followed out there, with many saying, okay, Jay, we want to get started here, but we don't want to get something off the ground, and then we've got to mothball that thing within, say, 1 or 2 years. So the regulations major factor with this on the environmental side.
Yeah, where do you find the money? Where do you find the money to fund something like that, which will be very expensive? I mean, the lawyer fees. If I could be the lead lawyer firm, that'd be enough for me in my career right there, just to be the lead lawyer on a deal like that. But anyway, and then the margins. There's really not a lot of margins. It's kind of like how much gas stations make money on selling gasoline and not much, right? But they get their money on the 32 big gulps or whatever it is, inside. That's where they make their good money. But that same thing with refineries. There's just not a lot of money in it, and it's going to be a long time before we see new refineries. I mean, there is something that President Biden could do right now, stroke a pen, and he could get a huge increase in our refineries, increase the capacity of our refineries 15 to 20%. But he hasn't done it yet. I don't know why he hasn't done it, and I don't really know. I don't see anything out there that's saying that he wants to.
Well, let me ask you this. Let me ask you this. As far as from the environmental side, has the environmental side pretty much gotten the ear of the president? And that is driving the narrative right now as far as the extra regulations and things that they want folks to follow out there. And the other side of that is that should can the oil and gas industry do more to promote the narrative in Washington? Talk about the benefits of oil, of gas, of drilling, and things like that. Has the industry done a good job from that standpoint?
Yeah, well, it has, but it all starts at the top, right? And that's where I feel like with Trump. I mean, Trump, they're like, drill, baby, drill, and all of a sudden, man, you see some incredible projects that they're drilling up, increasing the rig count. We're sending oil to our strategic reserves at $20, $30 a barrel. I mean, there's just oil is plentiful, but then when you don't have it from the top, and you have a Democratic and a they didn't want oil and gas here at all, period. And I do write in my book the upside of oil and gas investing, which all proceeds go to military, but also I could go to my website, kingoperating.com, and I'll send your readers a book for free. And if they qualify for one of our investment programs, I'll sign the next 5 of them. Okay. To go to the website.
Well, but the thing about this, though, I think it does open up the discussion about the narrative out there because, folks, I don't think they want to go back to this whole idea of running into $5-6 a gallon for diesel or for the, for unleaded, but a family passenger car. So a story, of course, we're going to follow. Jay, I've got to get ready to wrap it up, and thank you, sir. I've got about 2 minutes left, and got to close out the segment. But thanks again very much for joining me on the program to talk about this. Energy expert, oil and gas expert, Jay Young, on the line with us. And, Jay, let's do it again soon. Thank you for the time.